Business economics, also called managerial economics, is the application of economic theory and methodology to business. Business involves decision making. Decision making means a process of selecting one out of two or more alternative courses of action. The question of choice arises because the basic resources such as capital, land, labor, and management are limited and can be employed in alternative uses. The decision-making function thus becomes one of making choice and taking decisions that will provide the most efficient means of attaining a desired end, say, profit maximization. Different aspects of a business need attention of the chief executive. He may be called upon to choose a single option among the many that may be available to him. It will be in the interest of the business to reach an optimal decision, the one that promotes the goal of the business firm. A scientific formulation of the business problem and finding its optimal solution requires that the business firm be equipped with a rational methodology and appropriate tools. Business or managerial economics meets these needs of a business or firm. Business economics is a field of applied economics which uses economic theory and quantitative methods to analyze business enterprises and factors contributing to the diversity of organizational structure and the relationship of the firms with labor, capital, and product markets. Managerial economics is the application of economic concepts and economic analysis to the problems of formulation of rational managerial decisions. Business economics is an integral part of traditional economics. It is an extension of economic concepts to the real business situations. It is an applied science in the sense of a tool of managerial decision making and forward planning by the management. In other words, business economics is concerned with the application of economic theory to business management. Now, the characteristics of business economics begins with the fact that it is microeconomic in nature, in so much that business economics deals with the matters of a particular business firm only. It uses economic theories relating to profits, distribution of income, etc. It is a realistic one. Business economics is a realistic science. It studies all matters concerning business organization by considering the real conditions existing in the business field. Business economics is a normative science. It studies the matters concerning the aims and objectives of a business firm. It determines the methods to be adopted for achieving such objectives. It also makes inquiry into the good and bad in decision making. Hence, it's a normative science. Even though business economics has the nature of microeconomics, it also uses macroeconomic approaches frequently. Certain matters in macroeconomics like business cycles, national income, public finance, foreign trade, etc., which are essential for business economics. So business economics uses macroeconomic phenomena for taking business decisions. Business economics is concerned with issues and problems related to business organization, management, and strategy. The issues and problems include an explanation of why corporate firms emerge and exist, why they expand horizontally, vertically, and spatially, the role of entrepreneurs and entrepreneurship, the significance of organizational structure, the relationship of the firms with its employees, the providers of capital, the customers, the government, and the interactions between firms and government. Managerial economics is the application of economic concepts and economic analysis to the problems of formulating rational managerial decisions. As mentioned earlier, it is sometimes referred to as business economics and is a branch of economics that applies microeconomic analysis to decision methods of businesses or other management units. As such, it bridges economic theory and economics in practice. It draws heavily from quantitative techniques such as regression analysis, correlation, calculus. If there is an underlying theme that runs through most managerial economics, it is the attempt to optimize business decisions given the firm's objectives and given constraints. For example, through the use of operations research, mathematical programming, game theory for strategic decisions, and other computational methods. Here are some books as suggested in our bibliography, which please feel free to peruse through them to increase your knowledge of the subject. In subsequent videos, we will deal with each of the subtopics under the subject in detail. Thank you.